switch my mic. It looks like my microphone here is messed up. The one I normally use. So we'll go ahead and talk on this one. How's everyone doing today? Let's go. A lot of craziness going on here. Tons of craziness going on. Gonna do a lot of stuff here. Hope everyone's having a good week here. Let some people jump in. We're gonna go over some stuff here. We'll go over some. Yeah, it's been a while since I went live. I always take a break usually. Every month here. At least try to for the wife and the fam there for a little bit. But I can hear you. You can hear me good. Good. All right. Perfect. Alrighty. So start to get into some stuff here. We got a lot of stuff to go over here. We're gonna talk about AMC, the price, how they've been controlling it, why we haven't moved at all. This should be a crime in itself, and the fact that there's not a rule out there that is against this is unbelievable. And I sat there and talked about it, and of course everybody rushes out real quick. Got to make videos about this, and it's like, if you heard anybody today talk about Citadel Securities and their routing, which we're going to get into in a second, they showed you this graph, but they didn't tell you anything else. I always give fucking credit, dude. I saw like 60 fucking videos instantly. Oh god, somebody put out a little bit of information. We better take it and make a video. But I always give your source and where you got everything, because otherwise you're not gonna be able to explain it right. And there was a ton of people that looked at this data and had no fucking clue how to read it. And it's like, that's what I'm saying. Like, tons of information gets out. So earlier this morning, Randall Cornett, and I know there's people out there that, however you feel about Randall Cornett, it doesn't matter. What he's showing me is data. Now, I'm going to show you the data. This is Citadel's own statements. We're going to break everything down. We're going to look at the SECs. I'm going to break everything down for you here, and you're going to see what's going on with the routing and pretty much why they're controlling this and exactly how. And like I said, this is an absolute fucking crime. This is something that should be. The fact that regulators are allowing this, and there is no rule. I've looked it up. I've looked in every fucking way possible. I've asked AI. I've asked people that work in the industry. Tried to talk to Dave Lauer. There's a plenty of people and information to verify all this. There is nothing out there that says a market maker cannot. Here, I even should pull this up here. There's nothing out there that says a market maker cannot internalize. Oops, sorry, this is the wrong one. 100% of their orders that came to them. Market makers and stock markets, especially those dealing with over-the-counter OTC securities, are those with significant influence in electronic communication networks, ECNs, have been known to internalize a high percentage of their orders they receive. However, internalizing 100% of orders, while theoretically is possible, under certain conditions, you might face some practical and regulatory constraints, which you don't. There's nothing to stop them. Now, when it talks about the regulatory bodies here, regulatory bodies like the SEC in the U.S. aim to ensure fair and open markets. While there's no explicit rule against internalizing all orders, there's nothing out there. Regulations like Reg NMSN, blah blah blah, in the UNS are designed to promote transparency, competition, and best execution for investors. But there's nothing saying that if the market maker feels that they can internalize it, that'd be their best execution quality at the time. So there's nothing saying that they can't do that. But it says that if they do that, they might get some scrutiny. Regulatory scrutiny would increase. Not that they'd get fined, not that they'd get in trouble, but they'd say, hey, you stop it. You better stop it. Don't do that. That's not fair. That's not being competitive. You knock it off. There's nothing out there stopping them. So, Randall, he came over and he's like, hey, look at, because he posted this last month, and you talked about their 605 report in July, and he talked about how only barely any shares. There was only 1.96 million shares of AMC that went to Citadel that was actually routed to an exchange. I'm going to say that one more time. As many shares as people bought, 1.96 million actually went to an exchange to affect price. Now, if you guys come over here, so like Randall said, he wanted me to double check and verify and everything, and I talked to Dave, I talked to fucking Peter. The data is correct. There's no changes. I went and I looked at Goldman Sachs. I looked at other market makers, JP Morgan. All their 605 data is filled in. It's correct. Virtue is correct, okay? Nobody's information is incorrect. Now, he made up a ledger, so he thought that this is what certain things were. So we were just talking about if any of this stuff makes sense. So one of the things I did, because what he wanted me to try and verify what the columns were, what we wanted to make sure we were looking at the data correct. So I found an SEC website. There's actually a question and answer for this. You can pull it down here. I will go ahead and post the HTML. If you guys go ahead and copy that link, you can post this up. And if you read here in column number 11, column number 11 is any of the shares that Citadel receives that they send to other venues. So exchanges, this is what would affect price. This is what, makes competition in the market, because you're not just filling it in one place. This is what's supposed to give you guys better execution, better quality, better price improvement. This column, this is where it all matters. This is the goal. This is where it all happens. This is the only time you see it affect numbers. Now, if you come over to Citadel here, let's go ahead. I'm going to post this link as well. Go ahead and pull this up. Now, if you pull this up with me, this is their 605 statements. Now, every single market maker needs to do these 605 reports. They are execution statements. Tells you where everything went. Now, if you go ahead and click on June, we're going to start with June, and then August is where it gets pretty interesting. But I just want to show you this for reference. And then you can go ahead and, if you want, go to Google, type in Goldman Sachs 605 report. Pull it up, just hit Control F, go AMC, go on down. You can see you'll start out at AMC, so make sure you get the right AMC, because there's going to be, you have AMCR, you have AMC. So this right here is the only lines that I give a fuck about. I don't care about any other data. So in June, that means the 11th column, if you read this from the SEC, this is the order of the format of the fields. The number 1, it'll tell you where it went, as you guys can see. Number 1 is T, tells you exactly where it went. Right here, as you guys can see, it went to the NASD. So as you guys can see, so this is column 1. Okay, we want to get to the 11th column. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. 729. Okay, 729 shares on this ping for Citadel at this time period was sent to the exchange. That's it. Now you come down here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. This one's a little better. You got 22, 2,262. It's still not a lot. If you look at other stocks during this time period, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, you can see they send a lot more shares compared to AMC, because they are controlling the price of AMC. As you guys can see, here's over 1 million, 91,000, 71,000, 48,000, 600, was it 606,000? It's continuously a large amount. So they're getting price improvement. Now you look at other stocks, it's just so I can give you another reference, so you don't just be like, oh my god, he just randomly picked something that he knew. I don't know, we'll just go down here and fucking pick. Hell, we'll just go like this. Boom. Okay, now you know I didn't fucking cheat. Where are we at? Alright, let's go like... Alright, let's pick something that's not trash. I mean, we're looking at things that have like 0 orders. I need something that actually has fucking orders here. Let's do like... I know exactly what I'll look at. Let's go look at GME. Fuck it, I'm gonna do it this way. Okay. No. Like I said, make sure you're always looking at the right fucking one. Look at GameStop. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. 3,000. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. What the hell is that? That's a big ass chunk. And this is when you're seeing those runs, is when they're allowing blocks to come through. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Here's one for 66,000. 1, 2, 3, 4. So as you guys can see, there's plenty when they want to start to go to the exchanges to go to the exchanges. Now let's go back to AMC quick. Alright, now you come back to AMC. Now again, when it comes to AMC, you have 700, you have 2,206. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Well, this one you have 500. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 16,000. As you guys can see, it's like barely there. But they are sending, there's data. They are sending shares. Okay, now you come over here. Let's go back. Let's click on July. Let's go ahead and go back to AMC one more time here quick, and then we're going to get into August, and you're going to notice something quite blatant. Now, if you come down here, we're going to go over here. Boom, you got AMC. You just want AMC columns, just like I said, Control F, AMC. Now you want the 11th column. Once again, we just want to look at down here, shares that went to other venues. AMC, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 300. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 963. 3,330 or 51. 3,011. 7,000. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 0. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 6,000. So as you guys can see, it's like 1,000 here and there, 1,000 here and there. That was July. Now let's look at August's data. If you come back here, look over at August's data that was just posted. So let's look over at AMC here. All right. Basically, since AMC's announced, hold on, there you go. So if you look here at August, this is AMC. Now watch this. Column 11. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. 0. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. 0. 0. 0. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. 0. 0. 0. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. 0. 0. Over here, AMC, 0, 0. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. 0. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. 0. 0. 0. 0. 0. 0. 0, 0, and 0. They did not route a single fucking AMC share in August. Not a single share in August. Went to another venue for price improvement. Went to another venue for execution, price improvement for you to affect the stock price. Citadel literally didn't send a single fucking order. Michael Anthony, I can't see nothing to know what you are counting. We're counting Citadel's 605 report. Citadel wrote a 60. They have to file 605 reports, which tells where they execute. It's like it's execution reporting. Now, if you look at the SEC's website, it says to look at column 11. Column 11 tells you what amount of shares that the market maker, number one market maker, now remember, they're the number one market maker in the United States. If they're sending nothing that they're gaining, if not a single fucking order of theirs that they're taking over and they're the number one guy is going to the exchanges to do price, that means they internalized. Look at this means Citadel internalized every single order for AMC in fucking August. Everyone. Every fucking order for AMC in August got internalized. If you internalize orders, example, when a client places an order with their broker to buy certain shares of stock, the broker has to get these shares from somewhere to fill the order, such as a completed order, blah, blah, blah. They can do internalization. Wait, this isn't the right fucking thing. Here you go. Here you go. Additionally, because such shares are not conducted on the open market, the brokerage firm is less likely to influence price if it sells a large portion of its own shares. So Citadel is literally fucking internalizing 100% of the orders for AMC in August. 100% of them. And that's why fucking we're getting no price movement. How the fuck are you going to get price movement when the number one market maker isn't sending a single fucking routed share to the exchanges? This is literally fucking criminal. This should be fucking criminal. And it's not. It's not a crime. They can do that. They're not supposed to. They might get a slap on the wrist and yelled at. But they literally didn't fucking send a single goddamn share. And I looked over at JP Morgan, Goldman Sachs, Virtue. They have numbers there. So it's not like suddenly like, oh, maybe there's a my first thought, the first thing I said to Randall, maybe they changed something in the reporting style. No, they did not. Nope, they didn't. Everyone else's is correct. So either Citadel sent out incomplete data and they don't want to tell you how much actually went to the exchange, or they literally didn't send a single share there and internalized every single fucking AMC share, and then the shorts obviously could overpower the price movement, no problem. If Citadel's not sending a single share there. Michael, the link's right here, man. Oh, wait, sorry, right here. The link's right here. You can't do that text link. It's a text link. You got to click on this and then just hit August. So again, Citadel literally internalized everything. And there's your proof. It's not even a me, he said, she said. It's right here. The SEC's own website. The SEC's own website tells you exactly what the columns are. Here it is. It's on their own frequently asked questions. If they send any order to a venue, and I showed you other stocks that they want to move, get a ton in that column. It's millions compared to AMC getting a few hundred. So, again, this is fucking crime. This is absolute fucking crime. And they had data every month before August, and now August they just, like I said, unreal, dude. Unfucking real, dude. Citadel is a fucking, said they're just a fucking domestic terrorist group. That's all they do. They're just here to steal from you. That's why China banned them. And it's funny because right now they didn't get that bid. They lost their bid to get into China. So now they're trying to file to get into China, and China's basically going to go tell them to fuck themselves. There's no way. You are right. No, Victoria, you are correct. You are correct. Ken said it is his job to pick the stock price. Well, I can tell you this much. If you don't send a single share, to lit markets, you are definitely you're going to set that stock price real fucking easy. MC, thank you very much, my friend. I appreciate that. Little Bigums appreciates that. We'll get a little formula. Shit gets expensive. But yeah, like I said, this is a fucking joke. Everybody why is AMC's price going down? Is it Adam Aaron? No, Adam Aaron's sitting here. He's fucking polishing up the fucking books. We're gonna be profitable again. We paid down more debt. It makes 0 sense that AMC is where it is. It's a laughing fucking stock. AMC is where it's at. How is it where it's at? Right in front of you. The 605 report. Right there. The data is right there. Again, the link is in there, guys. Make sure you guys check that out. Now, you guys remember this. Remember what I'm showing you here, because I've told you guys something like this is going to happen when we're getting close. Now, I want to show you guys something. There's stuff you guys need to be paying attention to right now. So, let's talk about this first, because this impacts everything here. So, the 10-year keeps going up. The 10-year has gone up and up and up ever since he's announced rate cuts. It's skyrocketed. Now, I told you this wasn't going to help us, other than the fact it was going to save corporations money. When they're doing these rate cuts right now, it's pretty much just to help corporations, because even when they do federal rate cuts right now, the problem is everything else is so bad that the 10-year is going to keep on rising. And as long as that rises, it doesn't matter what the fucking feds do with these rate cuts. Now, this is why I told you they shouldn't cut rates right now. They can't cut rates right now because they're not going to do anything. They just fuck themselves. Now, let's look over here and see. Let's look at what is going on. Why do 10 years matter? What is a 10-year treasury? Considered one of the lowest risk investments in the United States market. 10-year treasuries are a risk-free benchmark against other investments, and debts are compared. 3 months treasury, blah blah blah. While no investment is ever debt-free, T-bonds are basically, treasury notes are pretty much guaranteed. Now, treasury notes are one of 4 main types of U.S. government debt securities and other. Wait, am I on the right fucking thing? No, hold on. Here you go. Sorry, I said the wrong one. Why is the U.S. Treasury important? As one of the lowest risk investments on the market, the 10-year Treasury and its yields are important for several reasons. Investors use the 10-year Treasury as a baseline against which to compare the risks and rewards of other investments. Now, that means if the 10-year keeps going up, guess what? Mortgage loans go up. Treasury rates affect interest rates for other type of consumer debt, such as real estate and mortgage loans. Consumer often compare them. This also loans for credit cards. The 10-year will affect auto loans, so car loans, mortgage loans, credit card rates. If the 10-year keeps going up, so does the credit card rate. So why everyone sits there and goes, "Oh God, the rates are gonna fucking bring the housing market down, and he's gonna keep cutting, and then we're gonna be great." That's absolutely incorrect. This is gonna keep rising. We're gonna hit 4.5. We're gonna get back to 4.5. Now, if you guys look over here, we will be back into the 4.45, 4.6 numbers. 4.9. This could keep rising. This is going to keep rising because the problem is in the United States is everything else is so bad. And I told you guys, we would get to a point where they can't sweep this under the fucking rug, and they're getting there. This is exactly where they're at because the 10-year and everything else that's happening to our country and our economy right now. If you guys look over here, well, I'm sorry. Oh, here you go. Anyways, so mortgage rates. I want you to listen to this. Mortgage rates 20 days ago, so before he announced the cut, 20 days ago, the average mortgage rate was at 6.1%. Since Powell has cut by 50 points, we have jumped to 6.62%. They're saying we're going to see 7% Powell's going to cut rates again, and I told you the thing is they can cut rates, uh, uh, to us and everything, but they're gonna keep rising, whether they want them to or not, and this is the problem. And when they sit there and keep on, oh, we're gonna lower it, lower it, you're just gonna undo all that inflation that you just did as well. Because if you, again, like I said, this is gonna keep going up, so you're gonna keep getting this. This is gonna hit 7%. Well, the problem is prices are not going anywhere. They're going to go up. Supply is going up, but so are the rates. Nobody can afford to still buy. It's actually getting harder to buy. Even with supply, it's not going down enough, and now the rates went ahead and equaled out what the houses went down just a little bit on the supply side. So now you basically like I said, they're going to keep remapping it. Now, this is the problem in the housing market. You have 40% of loans that are paid off in full. And most of those are by BlackRock and institutions. Okay? So when these guys sit there, and I want you to listen to this, when they sit there and tell you, I'm going to lower rates, what does this really mean? It means that the bank is going to pay you less money to have your deposit. The first thing that banks do to equal this out now is they lower deposit rates. So they pay the people that they use all of their money to do all their crimes, they pay them less. That is what rates do. I'm going to pay you less there. Yes, eventually it'll catch up to the housing market in a normal circumstance. But the problem is I told you, like I said, when you cut rates, it has to be perceived by the rest of the world as a strong move, not as a recessionary move, not as something to stop something, not because your economy's garbage, not because, no. The problem is the United States has sat there. Hey, thank you, I appreciate that. Little Merc snacks, we'll get them some of those for you. I appreciate it, my friend. But the problem is we can't stop fucking printing. We cannot stop fucking printing. Jerome Powell says the feds can cut rates, but it can't fix the housing crisis, because the problem is all of those companies have these houses, and they're not. Everyone's gonna hear, oh, the rates are going down, the fucking rates are going down, the rates are going on, supply's coming up. Well, guess what? They're gonna hold on to it because they're not gonna take a loss on those assets. So what's gonna end up happening is supply's gonna sit there because the normal citizen cannot fucking get it. They still can't get it. But the price is going to hold because mainly it's fucking BlackRock. The people in institutions that have them. The people like us, and 75% are locked in under 4%, remember. They're not going any fucking where. The supply side's going to go up for a brief moment, instantly come right back. But you're going to have the prices, the fucking rate still high. They're going to be up at like 7%, and then it's going to equal, they're going to shoot back up to where they were. And then it's going to get to this point where they're going to be kind of steady for a little bit. And the second that the rates go down and down and down, the price will shoot back up. And now people like BlackRock and them are going to make a fucking killing. Why now the average house is like 400 fucking thousand. But it's at 4 or 5% now. But they raised the cost of it by fucking an extra $100K in the meantime. And BlackRock made a killing. Like I said, the United States does not give a shit about you. They care about making bankers rich, even though they're already the richest pieces of shit because they're the biggest criminals on the fucking planet. That is what the United States is here for. We're here to make banks rich. That's it. That is what they want to do. Now, if you go look over here, the reason why these 10-year treasuries, along with the mortgage rates, home rates, or auto rates, credit card rates. Now, if you look over here, it was at the back more. Hold on, where the hell did I put it? Here. Look at. Credit card rates are spiking up. He cut rates, but credit card rates are spiking up. They're on a big uptrend. They're moving up. Mortgage rates, again, they jumped up to 6.62% from 6.1 in 20 days since he announced cutting rates. This this is going to get riskier and riskier and riskier because every single day, well, look at the feds for fuck's sake. The feds right now are operating. I told you they would hit 200 billion fucking last week, and they did. The Fed right now are operating at a negative $201 billion loss, paper loss, paper loss, not unrealized loss. The Federal Reserve currently is operating at a paper loss of $201 billion. They have wrote an IOU to the Treasury for $201 billion. And every fucking day, that IOU gets bigger and bigger and bigger and bigger and bigger. Other countries are seeing we are operating at a loss. The fucking Federal Reserve is basically making itself go broke to bail out banks because the situation is that unbelievable. If you go look over at the fucking debt right now, you guys, you have to look at this. You have to see this. This is fucking ridiculous. Look at this right here. On the 27th, okay? What is that fucking 10 days ago? Okay? 10 days ago, the debt was at 35 trillion 296 billion. 10 days ago. Today, it went up to 35 trillion 680 billion. That is $400 billion in 10 days. We have added $400 billion to our debt in 10 fucking days. What the hell did you spend it on? And when you're sitting there adding debt by the hundreds of billions a week, other people don't want your shitty fucking bonds because it's risky. Are you going to be able to pay this back? Are you going to be able to do this? Like, is your GDP growing enough? Is your economy growing enough? It doesn't look like it. What else does that mean? What else does that mean if you're not having demand? It means that in the bond market, you don't want to get caught at 4% if you think it's going to jump to 4.5. You don't want to be paying a premium on your bond. Okay? You don't want to do that. It's going to cost you a lot of fucking money when it goes up to 4.5. So what you're going to do is you're going to wait. You're going to say, I think it's going to go to 4.5, and I'll go ahead and start buying more bonds then when it's at 4.5%. So what that means is this is going to keep jumping and fucking jumping and fucking jumping. Just like you're seeing now. And again, everything's going to get more expensive even when Powell's dumbass is cutting. Even when he's cutting, he knows he can't stop what's happening. They're so fucked right now. And I told you guys they're fucked forever. And I know everyone's like, no, they keep getting by. Yeah, they're getting by, but are they? We'll see what happens here. But again, look at your fucking Federal Reserve. The people who are in charge of money are broke. The people that can print and create money are broke. Think about that. The Federal Reserve is broke and owes $102 billion to the Treasury. Meanwhile, what else is happening? If you guys look, the dollar's dominance is slowly going down. Other people are starting to trade in their currencies. You got BRICS. You have all these people getting swap exchanges set up. The US dollar reserve falls below 60% for the first time since 1995. So for all these other countries, their dollar reserves are going down and down. It has fallen below 1995 levels because other people are realizing how fucked up the United States actually is. All the media can't hide it forever. All the corruption eventually fucking gets out, and guess what? It's been out. So again, you have dollar dominance going down, reserves in other country going down, you have more debt coming, your citizens and your economy are getting more fucked up, which means that your debt is becoming riskier, which means this 10-year needs to continue to rise. Even though Powell will continue to cut rates, you will see in the backside because of the 10-year, they will actually continue to go up. Now, what's that mean? It means it's going to be harder for even these hedge funds and people to borrow. It's going to be more expensive for them to borrow. Now, I brought this tweet up, because, I mean, he kind of goes over a lot of things that I've talked about, but he breaks it down more. So the bond market continues to move in the. I'm not gonna read the whole fucking thing here. Hold on. Okay. So it talks about difference on the yield, like I was talking about. You know, you could be at subpar. You don't want to be paying a premium. You could be getting a discount value if you got, like I said, if you get it at 4.5 and then it drops down to 4, you're getting that bond now at a discounted value. That's exactly what you want, which is why they're waiting. Okay, so this guy comes out and he talks about a whole bunch of reasons why you would wait on bonds. But he says, why would bonds sell below par? Ultimately, for the same reason stocks. There's no fucking demand. Why would there be little interest in them? First of all, they think they can find better yield elsewhere, which they can. On top of that, they're concerned about rates going up, which is something I went over. Uh, they're concerned about rates going up because, again, you don't want to end up paying a premium. If you think it's going to jump up to a 4.5, you're going to wait until it hits that 4.5 and then you'd rather you buy it and it comes back down than you continuously buy in early and you think it's going to raise and now you're paying a fucking premium. So again, they're going to keep going up. So he talks about that if you have a 20-year bond paying 5%, but the new bond comes up for 6%, the only way you make your bond attractive to investors is to lower the asking price. So in order for you to sell that, because everyone's going to buy the new bonds paying at 6%, you're going to have to pay a premium by discounting your bond. So other people are actually attractive and you're going to take a hit on that bond. So, if you think that rates are going to continue to rise, you're going to wait and buy them at the higher level, and then, like I said, let it drop. Now, another thing is it's not nervous about the capital structure, which is the United States, their junk debt, chances of repayment, chances of default. Well, like I went over with GDP and everything and GDI data, we're fucking broke. This isn't, we're fucking broke, dude. Our GDP is not above what we're spending. We are spending more than we're earning as a country. We're not bringing in enough taxes. We don't have enough fucking. The economy is not stimulated at all. It's like they have everything and we're slaves and we're just kind of chilling. Like no one's buying anything. We'll get into that in a second here, but again, they're going to have to continuously fucking raise these bonds, which will again have a backfire. So even when he's lowering them, they will still go fucking up. And all these normal people are going to be going like, why the fuck are they still going up? I thought it was supposed to be getting blah, blah, blah. But what's going to end up happening is for, like I said, a brief period. I'm going to give you like 3 months, okay? For like the next 3-4 months, home prices will drop. There will be an extra supply all of a sudden. But that extra supply will be gobbled up insanely fucking fast. And then we're going to be right back where we were. We're going to be right back to no supply. They're going to have to raise fucking the prices that dropped. They're going to go right back up. The rates are going to continue to rise because guess what? Your 10-year is going to keep fucking going up because we're that shitty of an economy. And then it's going to get back to the point where it's it's going to be high fucking interest and high price. So again, the housing market's fucked. People see this shit. They're not going to sit there and fucking buy into these bonds and stuff. The United States has no choice but to make them more attractive to people because we can't stop spending. They got to get people to buy the debt. They got to get them to buy the debt. So they're going to keep fucking raising this to and spend like they have never spent before. As you guys see, again, they spent $400 billion in 10 fucking days. And 3 of those days was on the weekend when they couldn't spend money. So basically, in 8 spending days, they spent $400 billion. Like, what? Fucking insanity. But again, the dollar's currency levels everywhere else, we're losing our power. We're losing our demand. Again, interest rates on credit cards going to continue to rise. But there's 2 things I really want to get into, and I want you guys to pay attention to this next, not this thing, but the next thing I'm going to get into, because we might be having the bomb. The domino might be getting pushed over. Bank of America might be dying. China is a massive sign right now. Don't know if you guys have checked out the Chinese stock market. It crashed. They're down. They were down at 7%, so it slowly rose back up. See, they were down here. They were down fucking below 2100. It took a smash. It was down like 9%. So China's market just got fucking dismantled. Just got fucking dismantled. Now, before we get into that though, I do want to show you something real quick because this is fucking retarded. I always tell you guys about, JP Morgan, these banks, how they're getting away with all this bullshit. They're moving everything into the derivatives market. They're blah, blah, blah. Guys, come down here. This article came out, today. So bank regulators provide a frightening look at the trading casino Jamie Dimon has built inside his federally insured bank. Like I tell you, Jamie Dimon is a terrorist. He's a fucking criminal. Absolute criminal. Now, the OCC report comes out and they showed the reports for the second quarter of this year. Okay, so if you want to go ahead and look at the quarterly report, you can click on this link. And I'll bring you right to the quarterly report so you guys can actually come down here, check out the numbers. I will go ahead and post this because, like I said, it's all about showing your source, your information, and providing facts. So here you go. Like I said, there's your link. Now, what these fucking pieces of shit have done is they're taking the riskiest part of their trades, okay, and they're moving it to their federally insured bank. By doing that, it creates an endless service of crises and bailouts. But when we had the Glass-Steagall Act in 1999, okay, one of the things it did was prevented banks from trading under their federally insured bank because regulators don't have access to it. They can't see the numbers. It's all self-report. Like, it's a complete bullshit joke. So what they're doing now is they're taking all of their fucking worst stuff and they're moving it, like I told you, into the derivatives under the federally insured bank. Now, a lot of people wonder, why doesn't Gary Gensler go after these fuckers? Well, the problem is he can't see where they're moving all of this shit. So, no bank, of course, has been more between the lines than federally insured JP Morgan Chase. So JP Morgan Chase and Jamie Dimon is at the center of all this. Go figure. No way. Not Jamie Dimon. So, if you look down here, there's 4,000 banks, blah, blah, blah. Those banks, if you look down here at their total derivatives, look at the fucking total derivatives. Top 4 commercial banks. Total derivatives of all banks, $208 fucking trillion. 183 trillion of that is these 4 banks. It is they are 4 banks hold 90% of derivatives fucking total. Like, what? That's insanity. No fucking way that much concentration should be through 4 fucking banks. Okay. Well, if you come down here, not only are they doing that, moving it over here, because again, regulators don't have access to this shit. Where is it? Here you go. Here you go. Federally insured banks are not allowed to. Oh, wait, not that one. Fucking. The SEC, whose job it is to provide regulatory oversight of stock trading in the United States, is not allowed to peek inside federally insured banks to see what's going on with stock trading. This appears to be a feature, not a bug, of mega banks refashioning the landscape of Wall Street by removing the glass fucking Stegall Act. Ridiculous. It's fucking so stupid. Like I said, look at this shit right here. On top of that, I've told you guys about JP Morgan Chase's gold and silver exposure in the derivatives market and how we just found out a little while ago they were cheating it and they were spoofing it and they got a giant fine for what they were doing to the gold market. Well, look, JP Morgan Chase appears to have a stranglehold on trading gold and silver contracts inside its mega bank. And the latest OCC report shows that all commercial banks have about 483 billion in precious metal contracts. Of that sum, JP Morgan Chase alone holds 281 billion. 58% of precious metal contracts are with JP Morgan Chase, who got charged with manipulating the precious metal market a couple months ago for 8 fucking years. They're literally doing the same fucking thing. They got charged, they got fined, and now they didn't give a shit. They just kept on going like it was literally nothing changed. And it's like we sit here and we look at these guys, sorry. We sit here and look at, well, why the fuck's nothing changing? Because these fucking assholes, they get slapped on the wrist, if that. Instead, it's a fucking gong show. But there's a silver lining in all of this. I had Dario on here a while back. Some people said he was hard to understand, but the guy's insanely intelligent. He wanted to show you guys. I want to show you guys this because Bank of America, I believe, is dying. Bank of America, I believe, is going to be a domino that's going to be pushed down and it's going to start fucking shit up. Now, if you guys look at Warren Buffett, he sells another 9.5 million shares of Bank of America. Warren Buffett has now fallen below 10%. He now, for the first time, fucking owns below 10% of Bank of America. At this point, he no longer has to report when he does sells. So he's just going to sell off his whole fucking position. He sold like $11 billion worth of this stock. Unbelievable. So he's selling the shit out of this. He's selling the shit out of this. And then you look over here. Chinese bank loans are banned from entering China's stock market. Now, we're going to go back and read one of Dario's articles, but one of the things here it says is the big bank is on life support. China knows it as preparing to withstand the shock. Is this bullish? Now, he said it's going to collapse, and as you guys see, China's collapsing today. One of the things, also, Warren Buffett's selling the shit out of this stock. If you guys read this, I'm going to pull up his article here. I'm going to share his article. He's got data to everything he says in here. He has links. If you, like I said, I'm going to post his article. Read the article. If you want the data sets, click on the data sets. I'm going to go on them all. But one of the things that he talks about here is we saw that since the first time in 2000 or since 2020, so since COVID started, okay, we saw the federal standing repo being tapped for significant size by one bank. Why does that bank, if there's all this liquidity and everything's going great, why couldn't this bank find any liquidity at that moment, and why did they need it from the Fed? So as you can see, there's a bank having problems. So this happens in 24 hours after a bank goes and taps a Fed standing repo. It was for like 2.6 billion, if I remember. If I looked at the chart, so they tapped it for 2.6 billion. Then 24 hours later, all those Bank of America accounts went to zero. Warren Buffett's selling the stock. Now, here's something that he pulls up that I also thought was very interesting. So, what if, you know, the reason it went to zero was they couldn't afford a bank run? Because Bank of America has become, like I said, we went over all their reports. They're like getting fucked up beyond belief. Bank of America has been in a lot of trouble. That's why Warren Buffett's getting 100% out of the stock. You don't just sell out of the stock and 100% unless you think bad shit's about to come down. So, comes over to China. Now comes. See, one of the things we talked about was the yen carry trade and how it's not done. Well, here's the problem with the United States. If you're going to lower rates and keep lowering rates, and Japan's going to keep raising rates, you're going to keep blowing up these yen carry trades. Well, if you guys look over here, this talks about as this is all going on, the very next day, where is it? Hold on. Fuck, did I close it down? I closed it. Damn it. Too many fucking tabs all the time. I was gonna pull it up. So after that, all these banks over in Europe, guess what happened to them? All their accounts went to zero. Same fucking thing. The next week, guess what happened? It was NatWest, RBS, Ulster Bank for the banks that went down in Europe, right after Bank of America's. Well, guess what happened before this? HSBC, Barclay, Lloyd's, they all went to zero. All this is starting to happen after these yen trades, these Chinese trades. Well, guess what? A lot of these people have a ton of trades in China stock. China's market's crashing. That's a pretty big fucking drop. People find out, like I said, this is the problem with these governments. They sit there and inject liquidity into their market. People find out it's just the government injecting liquidity in the market. It's not real. It's not there. And people don't go biting in. And again, next thing you notice, no demand. Nobody has assets. Nobody has money. And what do you know? You get this. So again, there could be things going on. And the reason I was brought up this about Dario is Dario said that we would be hearing about a bank having problems very soon with China. Here you go. Here, I'll post this article. He's been talking about this for actually a couple months now. That and Bank of America has been having problems for quite a bit of a couple months now. Oh, I'm sorry. Yeah, I mean this goes into a lot more detail. Again, he always has links on the bottom of his stuff, so make sure if you ever want to, verify his data, you can always go ahead and look at the links. But again, so could we be seeing something happening here with Bank of America? Could that be one of the ones? Well, Bank of America is one of those banks. If you come look down here, Bank of America is one of those four mega banks that's dealing in the precious metal market. Bank of America is one of those mega banks dealing in the total derivatives market. Sometimes it only takes one. So it's definitely something to keep an eye on. Bank of America customers are reporting account outages, seeing balances of $0. No, like I was saying, this entire shit is just about making banks rich at the cost of you. The Fed's high rates era handed $1 trillion windfall to U.S. banks. Lenders charged more for loans, but kept interest payments to savers down. U.S. banks made $1 trillion from the Federal Reserve's 2.5 year era of high interest rates. And this is what I was telling everybody, like, these banks are going to be making less money when they do these loans. It's going to be riskier. So guess what? They're going to be more picky about who they give them to, and these rate cuts aren't going to help citizens. It's going to help more of these fucking hedge funds and things like that. But in the meantime, it's going to make these banks hurt money. So they're going to again have to lower, but they're going to have to lower the deposit rates that they give you guys to make up for these losses. But I just wanted to show you guys, like I said, it's all about just giving these fucking cocksuckers as much as they can. They made $1 trillion. Really? There you go. While rates on some saving accounts were raised with the federal target, blah blah blah, those at the largest banks such as J.P. Morgan Chase and Bank of America got far less. Like I said, I don't know why people. I can't believe people. I've told you guys forever. Stop banking with these pieces of shit. They pay you nothing. They don't pay you fucking anything. There's so many places to not have your money at in any of these pieces of shit. But like I said, these guys, every single thing is about keeping the system afloat, but empowering the banks and giving them more. And that's exactly what Thomas Jefferson warned us. They're going to be these banks are going to be more judgmental, more dangerous than any standing army can ever be to the United States. And they're going to take it down, and they're going to go ahead and enslave the nation, which he literally said they will enslave the nation first by deflation, then by inflation. And that's exactly what they did. I mean, he literally told them what they were going to do, and now it's here. Again, other countries are looking at our debt, looking at our country's situation. The second quarter of 2024, total credit card debt in the United States hit an all-time record high of 1.142 trillion. This is the highest balance since they have been began tracking in 1999. This is a 5.8% increase from the previous year. The average balance per person is at $6,392. Now I showed you guys we're talking about this shit at like 18 to 21, 23%. Could you imagine having $6,000 on a credit card at fucking 18%? Like, holy fuck, you're never going to get out of that. Delinquency rates in the second quarter were at 7.18, which is up 5% from the previous quarter. Credit card utilization is now at almost 30%. All the new Gen Zers are the ones with credit card debt. But I mean, that's my point. Other countries are seeing this, which will continue to raise the 10-year, which will continuously raise everything, even with the fucking feds cutting. It's so retarded how bad this got. Through all of this, but don't worry, U.S. is on track to set a new record for homeless people with over 650,000 people living on the streets. But our economy is doing really well. I'm glad we have all this money to send to everywhere else, but not fucking help out these 650,000 people. Huh. All the people from the hurricane. They have to pay their fucking $750 back. If they have insurance, they have to pay it back. It's no longer it's a loan all of a sudden. It's like, what? And if you don't have insurance and I give you $750 as a sorry, oh, thank God. I have no fucking house, but oh, thank God. Thank God Joe Biden sent me this 750 fucking dollars. Fuck, I can almost buy a hotel for 2 fucking days. Oh God. Yeah, if you have those high interest rates on credit cards like that, man, you're gonna be in there forever. I don't know how you get out of it. But here's the thing, they're talking about rates and everything, and now they're talking about not getting as aggressive. They're talking about now we're gonna go back to 25-point cuts. Because they say payroll's too fucking high still. Yeah, that's laughable. Everything else says payroll's too low, but you guys say payroll's too high. But of course payroll's too high. It's look, another month, another record high number of government payrolls. Of course it's high. You guys keep making up bullshit jobs in the government that are fucking unnecessary just to give people jobs so you can report higher numbers. Payroll keeps going up. We can't figure out why we can't get the payroll numbers up. But yet you look over here and payroll for their fucking government workers is just skyrocketing. Huh. Huh. Fucking crazy. Meanwhile, the price of gold, I told you that 2600, 2650 is going to be its bottom. You got all the support level now. This shit's going to be just continuously slowly rising. Everybody sees everyone's fucking financial situation around the world. And yeah, the dollar's still dominant. But that's just because somehow everybody else is that much more fucked than we are. It's not because the trust is there. That oh fuck yeah, I feel real secure here. People are buying it because at some point they have to. But if there's going to be other assets that certain coming up here that are going to be more valuable, they're going to switch over to that. Meanwhile, Poland's central banks has expanded its gold reserves to 420 tons. Poland's central bank announced its goal to hold 20% of its currency in reserves. The race continues on. Again, central banks are going to keep buying gold by the record numbers. It keeps going. We've seen it for the last 5 months. They're buying it at a record pace. You have more people stacking, more people running in, more people trying to get it to back their currency because everyone's financial system is fucked. The first to unfuck it is going to be feeling real fucking good. Breaking news. FTX bankruptcy approved by judge. So there's now going to be 16 billion in repayments. It's not breaking anymore, but 16 billion in repayments now for everybody. So they're going to get payments plus their money back plus interest. So that's sweet. But because of this, you could also have a big jump in cryptos. So for somebody looking for a play when all these people get their money back, obviously this was crypto bros. So when they get their money plus interest, I could see them jumping back into cryptos. So you might see a little boost here in some cryptos. Sorry, if you are looking for a play soon, an event play, this is what I show you on stuff like this. These are event plays. This is one of the trading strategies I told you guys to look for is event plays. Another thing going on, Russian courts freeze funds of U.S. banks for J.P. Morgan Chase. J.P. Morgan Chase, they actually froze $372 million. Fuck them. Thank God. I don't care. Anyone that wants to fuck up J.P. Morgan Chase is alright in my book. I'm not saying Russia's alright in my book, but like other shit they do, but I'm alright that they're doing this. Because, like I said, in the end of the day, these banks are the biggest fucking terrorists in the entire world. They really are. But this is what I wanted to show you at the end, because this is. I showed you guys that when they get to this point and everything starts collapsing, getting fucked, it gets to the point where, like Powell's saying right here, they can't save it, they can't stop it. Eventually, we're gonna get too crazy. You might have some people going nuts. You know, you might have some kind of, I can't even talk about it, but you might have some things going on here in the United States pretty soon. But one of the things I want to show you here is when they got to that breaking point, I said one of the things that they'll end up doing is getting CBDCs and tokenization in. Well, guess what? Swift, this was announced 4 days ago. Swift, which is basically what all the fucking bankers use, Swift to trial live digital currency transactions next year. Global bank messaging network Swift will trial live transaction of tokenized assets and digital currency next year. It said on Thursday. This is the latest step in the currently slow-moving integration of such assets into the wider financial system. Banks and asset managers are talking about exploring tokenized traditional assets like bonds for several years. It can make it cheaper and better for them. Then it talks about how they're also CBDCs, central bank digital currencies, digital versions of fiat money, and fiat trading of tokenized assets. Monetary authorities are trying to get on top of technology advancing. Yeah, we know. So basically, wholesale CBDCs. Now, if you look over here, global banks set to use SWIFT system. SWIFT to be used worldwide. Now, I want you to see this fucking. Where is it here? Banks through North America, Europe, and Asia are set to use SWIFT connectivity to carry out live trials of digital assets and currencies. Now, I told you, and they're going to connect CBDCs on a global scale. Now, I told you they're going to make these CBDCs, and what they're going to do is crash the economy. They're going to crash all the fucking assets. They're going to crash everything. But what they're going to do, so they stay fucking rich, is they're going to go ahead and make their CBDCs, which will be backed by the fucking banks, which means that their asset value will not fucking drop. So when all of us get fucked over, their asset values will stay up. It's a fucking joke. But I want you to see this. This is what I want you to listen to. Okay? Talks about different types of fucking blah blah blahs. Alright, now listen to this. Indicates that 134 countries are actively investigating CBDCs and tokenized assets. We expect this market to hit $16 trillion by 2030. We expect there to be 16 trillion in tokenized asset market by fucking 2030. So in 5 years they expect $16 trillion to be traded in their CBDCs. 16 trillion. Okay, creating a complicated network of digital islands. It's just dumb, dude. These guys are just criminals. I cannot wait until we. If it's not my generation, I hope my fucking kids' generation. I hope somebody fucking eventually takes over these banks and there's a fucking new civil war, man, because we fucking need one. This is just unbelievable, the shit they're fucking ready to throw everyone through. Now, I told you guys they sat there and they threw everyone's fucking retirement. They threw everybody's everything. All their chips in one basket. They're all on the same fucking hill. They're all gonna burn together. They're all gonna fucking die when Nvidia dies. Mark Antoine of Apollo Chief, which we all know Apollo is one of the main fucking criminals. I jokingly say sometimes we've levered the entire retirement of Americans to Nvidia's performance. It just doesn't seem smart. We're going to fix this. We're in the process of fixing this. Man, are you getting some audio pops, man? Let me see if I can't back my mic up. I'm on a new mic today. I was hoping. I don't know what's going on with my microphone. It's like It stays on, but it just shuts off every 2 seconds, and it's a plugged-in one, so it must be something with my cord here. It's the only thing I can think of. But like I said, these fucking pieces of shit, they know they're all on the same hill, and they all just laugh about it. Well, we're gonna go down swinging. Yeah, I know. Go fuck yourselves. One of the things I want to show you guys here, which is hilarious. Oh, y'all getting some? Oh, you just mean like make some pop noise? Yeah, every once in a while I mute my mic here when I'm trying to take a drink or something quick. My bad. I won't mute it. But these guys, they go after this fucking fund today for spoofing, even though they said spoofing doesn't happen in the market. This is why the government is a piece of shit. Today we announced charges against a registered broker-dealer, TD Securities, for manipulating U.S. Treasury securities market through an illicit trading strategy known as spoofing. Goldman Sachs spoofs AMC every day, 7,000 times a day. And apparently they can't fucking see that, though. Oh man, little man's up. Alright, I just got one more thing to show everybody here quick. Then I'll look over some questions and I'm going to bounce for the night here. But illegal short selling to face maximum life sentences starting in Korea. With amendment to Capital Markets Act. The amendment to Capital Markets Act, which strengthens criminal penalties and administrative sanctions for illegal short selling, has passed. Under the new law, individuals who make illicit gains of more than $3.79 million through illegal short selling will face what? Yeah. They'll face harsher penalties with prison sentences up to life in prison. According to Financial Securities, the amendment to improve short selling illegal system passed on the 26th, and institutional investors will now be legally required to establish electronic short selling system. So they're basically going to make it so they all have to be on this electronic system. It's going to be run by them. They're going to be able to watch if people are short selling. And this is a technology that I want us to start to pay attention to because our own government needs to fucking do this if it actually works. So again, South Korea showing us the way, or North Korea showing us the way. Yeah, he's cranky up there. I gotta go. She might need to eat his bottle here, so yeah, it's bottle time. But does anyone have any questions, real quick? Pretty much went over everything. Does anyone have any questions? But again, Citadel, here's your live data for AMC. If you're wondering why the price is dropping, Citadel's literally not sending a single fucking order to the exchanges. And they're letting the shorts just have their fucking way with it. But alright, guys, I'm going to get going. Anyone have any questions? I don't see any questions over on the side, so I'm going to get going here. We should, like I said, we should be profitable Q3, profitable Q4. Every single time they drop rates, AMC saves money. Going into next year, we're feeling better and better and better, guys. So I know the price doesn't reflect it, but I'm showing you right here. This is exactly why. What they're gonna do with it, I don't fucking know. I'm just gonna keep holding, keep leveling down. So I'll see you guys here very soon. I'm gonna go make sure little man's all right. But thank you guys for listening. You two that donated, thank you again. I always appreciate that, my friends. Thank you and have a great day.